South Dakota follows the Federal Consumer Credit Protection Act formula for wage garnishment. South Dakota does not impose a more restrictive state cap, and its minimum wage tracks the federal rate. Here is what creditors need to know. The South Dakota garnishment limit, the lesser of 20% of disposable earnings per pay period, or the amount by which disposable earnings exceed 40 times the federal minimum wage per week. South Dakota uses a 20% cap rather than the federal 25% cap, and a 40 times multiplier rather than the federal 30 times. Both adjustments are more protective of debtors than the federal standard. The practical effect: South Dakota's 20% cap reduces the maximum garnishment per dollar of disposable earnings compared to the federal formula. The 40 times protected floor further reduces the available amount for lower-income workers. Disposable earnings in South Dakota: gross wages minus legally required deductions, federal income taxes, Social Security, Medicare. South Dakota has no state income tax, which means no state income tax deduction. Disposable earnings are higher per dollar of gross wages than in states with income taxes. South Dakota garnishment procedure: after obtaining a judgment, the creditor serves a garnishment order on the employer through the court process. The employer must answer and begin withholding within the required period. South Dakota provides for continuing garnishments. South Dakota's unlimited homestead exemption in value for qualifying acreage makes real estate enforcement impractical for the primary residents. Wage garnishment and bank levy are the primary enforcement tools. Exempt income: Social Security, unemployment, workers' compensation, disability benefits, and retirement income are generally exempt from garnishment in South Dakota. People Locator Skip Tracing provides South Dakota employer identification for wage garnishment. Visit peoplelocatorskiptracing.com to place your order.